Bloomberg Tech is live from the heart of Silicon Valley with Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, a sell-off in chip stocks drags the Nasdaq 100 near correction territory after signs of progress in China's chip making add to worries about the sustainability of the AI spending boom. Plus, SpaceX shares are raised 1/5 of their value since the record-setting debut of Musk's company as investors start to avoid riskier tech firms. And Apple briefly becomes just the second company ever to achieve a $5 trillion market valuation. We got the deets. It is a tech wreck. The Nasdaq 100 is flirting with correction territory. There are concerns about AI spending in a big week for tech earnings, particularly on the hyperscaler side, but semiconductors are a big part of it as well. The Philadelphia Semiconductor Index, or SOX, down for a fourth straight session, its lowest level since May. That's its longest run of declines, going back some time. Then there's the single names. SpaceX is a top story for us today. $1.2 trillion of value. Yep, $1.2 trillion of value erased from the peak it hit just days after its IPO at $135 a share. We're going to get the details. It is semiconductors that are the focus right now. China's chip industry is giving investors a reason to pause. New signs of progress are raising fresh questions about whether Beijing's catching up faster than expected. Bloomberg's Peter Elstrom, who leads our coverage of Asia Tech, is with us. That's one factor. You know, you see that in European trading with ASML. You see it carried over into the US session. But the market's paying close attention to what China is capable of doing in its domestic chip industry.
Yeah, that's right. Ed, as you know, as you've talked about many times on this show, we've had these valuations in the AI industry that have gone up and up and up and up. And now we're seeing them start to come back down with some additional momentum, as you were referring to earlier. I think there are a few different areas where we've seen causes for concern. Part of it is CapEx spending. We saw Alphabet report last week. They said they were going to raise their CapEx. That hit their stock pretty hard. A few months ago, that would have helped their stock. And in fact, this time it was the reverse. I think when it comes to the China competition, there are concerns on a number of different fronts. Moonshot, of course, gave us a wake-up call that the AI models in China are very good. It's not just DeepSeek. You also have Moonshot. You have Alibaba. You actually have quite a few of them that are very strong. There was this report that you're alluding to that the Chinese are actually making progress in lithography, the machines that are used to make chips. That would hit ASML in particular and may be able to provide more cost-advantageous machines for China. And then on top of that, you had CXMT go public this week. I think this we maybe haven't talked about enough. This is really the fourth big memory chip maker out there. It's going to compete with SK Hynix and Samsung. It went public this week in China. Their market value is $460 billion. It's already the most valuable company listed in China, may soon become the most valuable listed Chinese company any place. So that's putting pressure on SK Hynix and Samsung and Micron in particular, these stocks that have just been on a tear recently. So add that up and there are some concerns.
Bloomberg's Peter Elstrom, executive editor for tech in Asia. Thank you so much. The sell-off in AI and chip stocks is now hitting one of the biggest names in the market, and that is SpaceX. SpaceX shares have fallen 20% below their IPO price. That's more than $1.2 trillion of value erased since last month's peak, which was just within 4 days or 4 trading sessions of the listing. Bloomberg's Bailey Lipschultz tracking the story. A lot of traffic on this one straight away. On the sell side, everyone's pretty bullish on SpaceX. But in the weeks that have followed that IPO, it's been a downward trajectory.
Ed, we've seen kind of a war, if you will, with short sellers piling in. About 30% of the shares are sold short, so shorts are making a lot of money. To your point, the sell side came out very optimistic, unsurprisingly, because either their banks worked on the IPO and made it pretty hefty fees, or they want to kind of cozy up to SpaceX management and be able to tout relationships. The big question now is what has fundamentally changed about the story? After Friday's successful Starship launch, kind of a step in the right direction. The big debate, though, as you mentioned, we're seeing a lot of the steam coming off the market writ large. We're seeing the likes of SK Hynix and other big IPOs from this year trading well below their IPO price. So when you go back to SpaceX, you say, how much did that $1.77 trillion valuation at IPO make sense? And how does the company deliver from here, especially because we will get their first earnings report in early August. And August 6th, 2 days after that, we're going to have a lot of shares potentially unlocked for sale. So investors are really clamoring for how to best position ahead of those earnings. The first time we'll hear from the management team in a formal setting, and also what happens when north of 900 million shares potentially are unlocked just 2 days afterward.
Again, we're showing the trading of SpaceX since its debut on June 12th. I would point out that in the session, basically 90 minutes into it, the stock rebounded. It's now flat, but had gone to a gain of 2%. There is volatility in this session. Let's talk a little bit more about that Starship test. You know, when the test was scrubbed or aborted at the last moment a week prior, I thought it was amazing in the moment, the sharp drop in the stock in after-hours trading. And then there was a positive reaction when they finally got it done. Is anyone tracking that? Is that core to the thesis around SpaceX for any investors?
It's absolutely core, Ed. In the big debate around the IPO and around SpaceX's merger with XAI or acquisition of XAI was, is data centers in space going to be the key pillar for the thesis? And if you talk to anyone who's invested in the stock or the sell-side analyst, it is critical. So that launch, that successful launch, was a critical step in the right direction. But it doesn't address the fundamental debate that we're having across this market over valuations, particularly around artificial intelligence, and the fact of the matter that this is still a low float stock, still has a hefty valuation on a fundamental basis, and still has that overhang of shares coming unlocked. We're going to watch the shares available for trading go from a few hundred million to north of 5 billion by the end of December.
Wow.
So there's a lot to be coming on to float, and what that ultimately means from a dynamic of an IPO and of one of the largest companies in the world.
Bloomberg's Bailey Lipschultz, thank you very much. Let's get back to the market. Shanti Kelemen, 7IM co-chief investment officer, who says that while the fall in chips have been steep and quick, don't forget the rises were also sharp and fast. Started the program by saying we're in a technical bear market on the stocks, 25% drop from that June peak now. But it's so interesting that actually it's only now that we're down for a fourth straight session for the first time since December. This is an index that's gone up and down. Why are you sanguine about what's going on?
Well, I think we live in a world where there's increased volatility. So we know that we get new models out, new technology and new changes. And I think you have to remember that a lot of these indices, if you go look at places like Korea and Taiwan, or you look at the semiconductor index, they're very concentrated. So it's almost like we're taking definitions of bull and bear markets and corrections, and that were meant for broad stocks and broad economies, and we're putting them on indices. I think a lot of these companies are still up quite a bit year to date. I think what's happened is the rally was built on a lot of earnings growth, but then also some leverage and probably some fear of missing out. And I think if you strip away those second two and go back to the earnings story, you'll probably get to a more realistic place on where the valuations of these companies should be.
The Philadelphia Semiconductor Index for stocks is still up 55% year to date. So take your point. The market, the industry would tell you there is still in a position where demand severely outpaces their ability to supply. That is, in most cases, an enviable position to be in. Is that what the market's trading on?
I think the market, we know that's probably going to be the case for a bit longer, but the market will always look to the future. And if you start to see developments like, China's technological capabilities getting better, people will start to value stocks on that, even though you might not see chips come to the market for a year or two. And I think it's similar with earnings growth. People will look at the rate of increase of earnings growth rather than the absolute earnings growth. And I think on those things, we've just gotten to a place where expectations were probably a bit too high.
A big story just 24 hours ago was the return of circular financing, particularly in the case of NVIDIA. For lots of people, though, they said that's constructive, right? NVIDIA is basically greasing the wheels of the AI build-out. It allows people to move faster. But it had an impact in the moment on the stock. Where do you sit on that circular financing debate?
I think it's hard to fully know how much of it is actually committed funds that people can have to spend versus things that are more like call options on the future. And a lot of those contracts aren't fully disclosed, so you don't know all of that. I think there's also a bit in who are the reliable buyers and suppliers. For example, if you're getting an order from Apple that's 5 years out in the future, you can be pretty confident they'll be accepting that order and, putting their money through. There's probably other companies in the sector where you can have a bit less confidence in the ability that they'll actually come through and ultimately want to pay for the demand. So I think it's something to worry about, but I don't think that is going to be the fundamental thing, the fundamental risk in the industry. I think it's more about, is the technology fundamentally useful, and does it drive return on investment, more efficiencies, business growth in the whole economy?
The other story that we started the program on and will track throughout Bloomberg Tech is SpaceX, right? And Bailey, in my conversation, focused on the dynamics post-IPO and the recent catalysts for one direction or another being Starship. But really, the prospectus it couldn't be more clear. This is about AI. And I wonder how you value SpaceX right now in the context of it as a frontier lab and a seller of enterprise AI products.
Well, I think the vast majority of the TAM that they laid out in their prospectus was related to AI. So I think every time you have an AI wobble in the market, you should expect to see SpaceX down a bit, because that's what they've sold themselves as. Granted, they have this whole space business, which is really exciting, but the majority of the value was from that. I think the other huge pressure is probably the additional shares that are coming to market. And if you look at a lot of retail investment and retail enthusiasm around that offering, if there's a bit less money that retail investors have due to margin calls or leverage or other investments they own coming down, it probably means there's a bit less ability to take that extra supply in the market when we get it in the next few weeks.
And to be clear, the stock did open lower, and we talked about its 20% drop from the IPO price. It's rebounded. It's now up 0.5 percentage point. Just very quick, earnings, the simple next catalyst for SpaceX, August 4th?
Yeah, I think that'll be really interesting, not just what the earnings are, but to see how they're presented, how they're delivered. Do we get more detailed information? And then I think with earnings season, we've got really high expectations in general, so it's going to be hard for anyone to beat that. We've obviously got Microsoft, Meta, Amazon this week, so I think those will be key tests of whether, how the market reacts and if it stabilizes or if we drift a bit lower.
Shanti Kelemen of 7IM. Great to have you back on the show. Thank you very much. Now, coming up, we're actually going to speak to Microsoft Security EVP Hayete Gallot as they announce a new AI platform to combat AI cyber threats. That's next. This is Bloomberg Tech. Beijing is warning Washington over tariffs and AI sanctions just weeks before the leaders of the countries are set to meet. After the US imposed a new 12.5% tariff, China said the two sides had agreed to cap tariffs at 20%. Minutes later, Beijing also warned it would take, quote, all necessary measures if the US sanctions Chinese AI companies like startup Moonshot AI over claims they used American models to train their own systems. This comes as Anthropic CEO Dario Amodei joins the chorus of tech leaders warning against a crackdown on open weight models. In a blog post, he wrote that they can offer a public good, and his company has never supported a ban against them. Let's get more with Bloomberg's tech editor in Washington, Mike Shepard. Let's start with the China piece. This is live, right? This is something that happened in quick succession with China's Commerce Ministry and then the country at large, basically warning the US ahead of some crunch talks.
Well, that's right, Ed. They are responding, in essence, to the comments that we heard last week from Treasury Secretary Scott Bessent and the White House Science and Technology and Policy Advisor Michael Kratsios, warning that Beijing needed to be careful with the practices of Chinese startups, and that those companies, if they were found to be improperly using American AI technology through a process known as distillation, where they extract data on an industrial scale to produce rival chatbots, that practice was out of bounds and could be subject to sanctions. China is warning that such a move would prompt a retaliation by Beijing, and they are trying to lay out a defense for their own industry, and also pointing out that, look, distillation is a common practice, one engaged industry-wide, and we have not stepped beyond those bounds. And so, like the tariffs, they are trying to set the rules of the road from their perspective ahead of this crucial meeting with President Donald Trump and Xi Jinping set to take place here in Washington sometime in September.
Just very quickly on the Anthropic and Dario Amodei of it all, I would point out that there was a lot of chatter about Anthropic not being a part of the open weight letter that went out from Jensen and from NVIDIA and Microsoft, etc. But just quickly update us on what Anthropic had to say.
Well, that did not go unnoticed. On Friday, there was this industry-wide letter that dozens of companies signed, led by NVIDIA CEO Jensen Huang and Microsoft's Satya Nadella, calling for protection of open weight AI models, and that the U.S. government should not crack down on them as a response to the moonshot moment. Anthropic's name was not on that list, and there was some speculation, including from former White House AI czar David Sachs, that Anthropic actually favors more restrictions on open weight models to protect its own proprietary business. Anthropic shot back yesterday with this blog post from Dario Amodei saying that that was not the case. However, they did lay out that they do believe that open weight and closed weight models should be subject to mandatory safety reviews, which is a break from the industry. And he also disagreed with this notion that open weight models actually enhance cyber defenses. In fact, that was a key point that he disputed, and one that Jensen Huang had also raised yesterday in a separate missive aimed at promoting open source, not only as a technology that is fundamental to growing the economy and growing AI, but also to making sure that it is secure.
And I point out that Mr. Wang is in Washington, D.C. for more talks on the future of AI and public policy this week. Bloomberg's Mike Shepard, thank you very much. Also on AI, Taiwan has detained an NVIDIA employee over allegations of smuggling chips into China. That's according to sources. NVIDIA has not been accused of wrongdoing. The investigation is part of a broader effort spanning 4 jurisdictions as officials from Washington to Singapore target the shadow trade in AI chips. As AI models get more capable, so do the threats. Microsoft points to the recent OpenAI and Hugging Face case study as proof AI-powered attacks are already here. We spoke exclusively with Microsoft Security EVP Hayete Gallot about those threats and Microsoft's new Project Perception.
Take the most recent headline, right, last week with Hugging Face. When you think about it, they were attacked by AI. And they had to defend using AI. And they had on the flow to adapt themselves and build security workflows to try to find what is happening in my environment. Unfortunately, this is an illustration of what's happening and what we're seeing through our threat intelligence across all customers. AI is happening at scale, and our customers need that real-time protection. That's why we're building this new stack. Today, you have a lot of signals, but signals are signals. Customers don't want more signals. They want protections. Right. And that's what we're trying to do with AI, is really arming them to be able to defend themselves.
I want to get into the Hugging Face OpenAI case study, but what I wanted to ask you is, what is the attack that you're braced for? Where is the attack coming from?
It's interesting because I'm glad you're asking this question. When you think about security, there is multiple vectors of attack. One that has been talked about a lot recently is software vulnerability. Right. And you've seen there was the big moment with Mythos and people talking about software vulnerability. This is a real vector of attack. And so if you think about AI, what it's done is you used to be able to find maybe this many vulnerability. And now, in no time, you can find thousands of them, which means this is increasing your surface area for attackers to go after you. So really now it's how do you help customers find those vulnerabilities before somebody can take advantage of it and fix them. So that's an example of a scenario right now that is really top of mind for every customer because it's a reality that they're facing and they're seeing themselves as they scan their code.
It puts vulnerability to AI into context because historically we might talk about a malicious actor being at the state level or a hacking group. You know, I know that's a less than sophisticated example, but now the point I'm getting to is it's genuinely now comes from AI.
It is now. Your point is really on target. With AI now, we've made it much more accessible to exploit vulnerabilities. And customers are seeing it, and that's why they're moving very fast with AI.
That was part of my conversation with Microsoft Security Executive Vice President Hayete Gallot. You can watch the full conversation on the Bloomberg terminal and online. Now, coming up, Meta and BlackRock have plans to invest $14 billion to build a 1 gigawatt data center complex in Texas. We've got more on that deal next. This is Bloomberg Tech.
I'm Yahaira Anand, and this is Talking Tech. First up, Visa is eliminating about 2,600 jobs, or roughly 7% of its workforce. The CEO writing in a staff memo, viewed by Bloomberg that the cuts will mainly impact the technology and product teams. Plus, a new lawsuit brought by 26 former and current Meta employees alleges Meta is using discriminatory AI to fire workers. They say Meta did not consider factors like workers' protected leave or disabilities when it used AI to help select employees for a 10% layoff. And sticking with Meta, it is planning a 1 gigawatt data center complex in Texas with BlackRock. The project is expected to cost about $14 billion and come online in 2028. It's the latest sign Meta isn't backing away from its AI spending, even as investors scrutinize the returns on those investments like today. Ed?
Yahira, thank you. Let's stay with that story. Joining us is Bloomberg's Kurt Wagner. And as Yahira said, it's the latest example of Meta's commitment. It sounds like a lot of money. It sounds like a big project. Is it, in the context of everything else that Meta's doing?
A few years ago, I would have said, whoa, $14 billion, that's a huge project. Nowadays, when you think about all of these data centers being spun up and built, I would say it's sort of the kind of thing that we're hearing from them more often. Now, to put it in some perspective, I believe they recently announced that they were going to spend about $50 billion on their big data center in Louisiana, and that doesn't include a projection of, $200 billion or so in the chips that are going to go inside that data center. So this is a big project. Sure. Is it their biggest? No. And I imagine this is the kind of thing we're going to continue to see more of from them.
Real quick, Meta reports earnings tomorrow. What are we expecting?
I think it's going to be spending. We saw Google last week raise their CapEx guidance, and that sent the stock down. Meta did the same thing last quarter. They raised their target for CapEx. We'll see if they do so again. But the spending on this infrastructure for AI is really a focus for investors right now.
It is a big one as part of a big week in big tech earnings, and Bloomberg's Kurt Wagner leads the big tech team. Thank you very much. So coming up, Apple has big plans to re-enter the smart home market after years of delay. Another Bloomberg report on the progress there. This is what markets look like right now. The Nasdaq 100 near correction territory. The SOX down for a fourth straight day for the first time since December, and in a technical bear market. And why not? Let's throw crypto in there. Bitcoin caught up in the risk-off attitude of the financial market this Tuesday, $63,816 per token. Also out there is earnings and spending and a whole lot more. We'll go over it. It's halftime from San Francisco. Beautiful. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Good morning from San Francisco. Today's big number, $5 trillion. That's how much briefly Apple was valued at one point this morning, with the iPhone maker becoming just the second company ever to hit that market valuation. Shares rose as much as 1.8% in the session. We were off those session highs, but the company's market cap was pushed just above $5 trillion for the first time. We've dipped back below that. If the stock closes above $340.43, it will cross and stay at that threshold. This is what markets look like. It is a tech wreck where there are concerns about AI spending. There's an ongoing rotation out of AI stocks, and chip stocks are continuing to be under pressure. The stock's down for a fourth straight session, the first time since December in a technical bear market, down 25% from a June peak. Bloomberg's equities reporter, Ryan Vlastelica, is across all of the tech market. The chip story is so interesting. There are so many factors behind what's going on. What are you seeing from the equities desk right now?
Hey, there is a real reversal in momentum really across the tech space, but especially in the memory and storage part of the chip sector that we're seeing today. Obviously, this is a group that has done extremely well this year. The chip index had doubled in the first half of the year. But like you said, it is now in a bear market. There have been pretty dramatic reversals. I think there are a lot of concerns about the AI spending outlook, especially in the wake of Alphabet last week. We are seeing these major hyperscalers either go cash flow negative or otherwise their cash flow has been severely diminished. And I think that is having people really question how much longer are people going to tolerate this level of spending, and what does that mean for the chip demand outlook. At the same time, we're seeing increased competition out of China. just more greater efficiencies with new AI models, that also throws a wrench into the demand outlook for these groups. If we have more efficient models, then arguably you don't need as much infrastructure. So there is a lot that people are dealing with right now, in addition to just how much they rose over the first half of the year and some kind of natural profit taking off of that.
It's not just US names. I mean, a case study that's interesting is SK Hynix, right? Because we have the ADRs. We were there for it at the Nasdaq. But again, memory, an area of pressure. I think Micron today down significantly. Tell me a bit more about that specific space.
Yeah, well, again, this is an area that has been of particular interest throughout the year. Some of these names rose 2, 3, 4-fold, even more than that. So one I would highlight is SanDisk. I believe it's on track for its third straight session with a double-digit drop. It's lost a third of its value in just the past couple of days. These are pretty remarkable moves. And again, it does come after an extremely strong first half of the year. Memory has been very much in focus throughout 2026. There's been so much demand for these components, which are a part of the AI data center build out. We've also seen really higher prices as a result for these components. DRAM prices, I think, are up something like 800% since the end of August. So amid all of that, it maybe isn't surprising to see them pull back some just because of how well they've done. But again, with prices up so much, there are some concerns about really how much can companies absorb these higher prices. And again, what does that mean for their outlook? How much has already been priced in? Is it some kind of blue sky optimistic scenario? And if not, then you really need to assess, maybe are these companies trading at peak earnings? And if they are, what is their outlook? What is a fair valuation for them? I think that's why you're just seeing so much heavy volatility really in both directions. But lately, it's really been to the downside.
NVIDIA CEO Jensen Huang told me Friday, memory is still the bottleneck. Bloomberg's Ryan Vlastelica, thank you very much. Let's get back to shares of SpaceX. The stock had been extending a post-IPO slide that at one point this morning had taken the value erosion to $1.2 trillion since last month's peak. George Ferguson of Bloomberg Intelligence covers all things aerospace, defense, and has the SpaceX deck on the terminal. I would point out the stock's rebounded a little this morning. Wall Street continues to value this company based on AI. But everything that's happened in the last 2 weeks has been about a rocket. What's the latest BI thinking on that?
You know, I think, though, the slide is all a function of AI, right? The model we built out on SpaceX just showed that if the AI business worked, it could potentially grow into valuations that were similar to peers by the end of the decade, right? You know, the peers, the hyperscaler peers. And so I think whenever you have a slide in the tech world and the hyperscalers, I think you're going to see it felt extensively inside the SpaceX shares. I think that's what you've seen in the last couple days.
Right.
Weeks.
Again, I just want to point out for the Bloomberg Tech audience, George, the stock has really rebounded. It's up almost 3% now in the session. At one point, it'd be down like 2%, which is why we say it was $1.2 trillion or down 20% from the IPO price. Starship still feels important. You know, if you read the prospectus, go back and read it, all of that future business on the AI side, be it orbital data center, be it the sale of enterprise software, is predicated on Starship working to deploy the payload to orbit. What did you make of the test flight and the success of it?
Yeah, again, like I think it's another step in facilitation of the strategy. But you know, really, what I want to do is I want to start to see Starship lifting extensively into orbit. They also have to increase capacity on Starship as well. So every success is important. It's also important for Starlink in the near term, but Starlink just won't generate the revenue and profitability in the long run. But so, yeah, always happy to see a successful test flight, but it's just a facilitator for AI and data centers in space.
Okay, again, SpaceX had opened down almost 4%, dropped to 5%. It's now back up almost 3%. George Ferguson, part of the team at Bloomberg Intelligence covering SpaceX. Apple wants to get inside your home. The smartphone maker is preparing a new push into the smart home market with devices that have Siri at the center of it all. That's according to sources. Bloomberg senior tech editor Dana Wollman joins us now. We're talking about the market where Apple takes on Amazon with the Echo devices, Google Nest, but it's something at the center of your home where there's an interaction with voice. And in Mark Gurman's latest report, there's a lot of detail on what happens next. What do we need to know?
Yes, absolutely. So this is a smart home hub, and I think the competitors you mentioned are really good comps to start, the Echo devices and Nest devices. This will have, he says, a roughly 7-inch display. You could use it for things like video conferencing, controlling the smart home objects in your home. I imagine something like recipe use in kitchens would also be a really great and popular use case. And according to our report, Apple has been working on this a long time and really wanted to enter this space earlier, but it was waiting for its software engineers to catch up on the AI side, where of course it's been a noted laggard. So finally the company has Siri AI out, and really what's one of the new details in our report out today is that the company is ready to unveil some new devices in this area this fall at last.
We also got confirmation of something that Bloomberg reported on July 21st, which is Apple upgrade with Klarna, financing, and we have some pricing. What do we need to know?
Yes, this will be a device leasing program really meant for the growing generation of people who have gotten more comfortable with buy now, pay later models for buying things. And this is a nice boost for Apple's services business, which is already its fastest growing unit. So that should please investors as well, alongside the news that it's making this delayed effort to boost its home and wearables business, which is the unit where the smart home devices will go.
Bloomberg's Dana Wollman, consumer tech editor. Thank you so much. Now, coming up, our next guest believes we're entering the next phase of enterprise AI. It's all about deployment. Joining us, Sapphire Ventures partner Cathy Gallot, back on the show. This is Bloomberg Tech. If public markets are debating whether AI spending has peaked, venture investors are asking a different question. Where does the next wave of value actually get created? Increasingly, our next guest argues, the answer isn't another foundation model. It's AI built for industries like healthcare, real estate, legal services. Joining us now, back on Bloomberg Tech, Sapphire Ventures partner Cathy Gallot. That's where you focus, vertical AI, you know. I reflect that over the last year and more, at the very early stage, we've seen insane seed rounds of Neolabs.
Yes.
Still intense news headline domination of Anthropic and OpenAI. You think there's a lot more out there?
So we're at a very interesting point in time right now where we've shifted from the first stages of enterprise AI adoption, where it was all about the race to intelligence. Who has the better models? Let's find the use cases. And now we're entering an era of true deployment. Right? So fitting these solutions into everyday workflows, into existing systems, figuring out precisely what the use cases are, and of course, having measurable ROI. This shift dramatically favors, I would argue, vertical AI companies. These are companies that have deep domain expertise, they have deep understanding of their customers, and they have the capability to solve the long tail of things that could go wrong. And as intelligence continues to commoditize, everything else around intelligence will become more important.
You were raised by a software engineer. You have had a lot of experience in the world of finance, financial markets, and you've been a software investor. You still need to model somehow that there is an addressable market for vertical AI. How are you doing that? Like, is it there a public proxy? Is there an example to follow?
So the pitfall is when you look at historical software spend for some of these verticals, because they could be very, very small. Take residential real estate, for example. Yes. If you just look at the comms and look at historic software companies focused just on that sector, it's not interesting enough for many VC investors. Yep. However, what we're seeing now with AI, in particular AI agents, is that the agents are taking ownership of the workflow end to end. It's no longer just about digitizing paper, but it's about automating entire workflows. And that lets you tap into a much bigger market, which is the existing labor market and the services market. So the best vertical AI companies that I'm seeing are very TAM expansionary. They're creating net new market.
The hard question is, why don't the foundation model companies and frontier labs just go after that addressable market too?
That is a great question, and I think it all comes down to a difference between breadth and depth. The reality is that these foundation models have been and will continue to build massive businesses, but they can't do everything, and it comes down to focus. When you think about these very specific vertical AI companies, they are hyper-focused on going that last mile to make sure every edge case is covered. They're integrating deeply into existing legacy systems, some of which haven't been changed in decades, and they're deploying armies of experts as forward deploy engineers to actually sit with the customer and work out all the kinks. Can the model companies do this? Yeah, they will do this for some of the largest models, but they can't cover everything.
So interesting to hear about legacy industries, entrenched industries that have a hard time changing their habits, right? Legal services, healthcare. But they're very different from one another. Is there one particular domain that you are most bullish on right now that will be just completely upended by a vertical AI offering?
That's a great question. I tend to think that the most interesting vertical AI markets are actually hiding in plain sight. And what I mean by that is, at first blush, these industries don't look super attractive. They tend to be super operationally complex, a lot of edge cases. I like to call them very gritty industries. And many founders might take one look and run away. But it turns out that grittiness is not a bug. It's actually the moat, right? If you can crack that and really get into the workflow, it becomes really, really sticky. So a great example, I mean, I called this out already. In one of our portfolio companies, Elise AI is focused on residential real estate, right? That market is, again, not a huge software market historically, but probably around 200 billion when you consider labor and services. Elise has now taken, built products that cover the workflows end to end, really expanding into that market. And today, they've crossed over 200 million ARR, and shockingly to me, they cover 1 in 6 U.S. based apartments.
Let's go macro a little bit. The news cycle has been dominated in the last 7 days about open models.
Yes.
A number of prominent leaders in technology, Jensen Huang, Satya Nadella, as a sort of coalition came out and said, we need America to do more on open weight models. What was your reaction to that, and why do you think they timed it such as they did?
Well, first of all, the letter was not surprising to me at all. If you just follow the incentives, especially around economics, it makes all the sense in the world. The companies that signed the letter that supported open weight models are exactly the companies that stand to gain from having a wider ecosystem, right? The more models there are, the more money NVIDIA makes. So none of that is surprising to me. I think what was surprising a little bit is the timing, right? Why now? And you could guess, a lot of these companies are getting ready for IPO, and they want to take control of the narrative.
It's interesting. I was going to say the timing also immediately post OpenAI and Hugging Face. I mean, in that example, right, Hugging Face looked to open models to defend itself. It was a cyber case study. As a venture capitalist, as someone that helps companies get off the ground, but is trying to make AI a positive story, frankly. Yes. How did you interpret that?
Well, I'll say that open weight models, I think in general, are great for the industry. A lot of our apps companies, if they have more access to models, more competition at the model layer, it'll drive down costs, and they'll have more options to choose from. And I definitely believe that's where the future is moving. In fact, the best AI companies are already multi-model companies.
Right.
On the other side, there are real risks that we have to think about as an industry, from security to safety to IP. And part of the reason why I think it was such a wake-up call to see the Hugging Face OpenAI story is reminding ourselves that security is not something that we could diminish. And in fact, we actually spend a lot of time investing in cybersecurity as well at Sapphire Ventures.
Let's finish by reflecting on Sapphire Ventures. What I recognize is even at the earliest stages, there are private growth equity, mutual funds, crossover funds, public-private funds from some of the biggest Wall Street firms involved in that field. You're a $10 billion firm, but what's that been like in the last 12 to 18 months?
That's such an interesting question, Ed. We're really starting to see a barbell distribution in terms of our investments. We're seeing some companies really break out, especially in particular verticals, but also horizontal companies, as well as infrastructure companies, where they've taken the leadership position. They've built distribution channels. They've built platforms that we feel like give it a better shot at defensible durability. And it's no longer growth at all costs. Growth is very, very important, but the narrative has switched to what about durability in the long run? And so we're investing in later stage companies that we see follow that arc, and we feel like are initially cementing themselves as leaders, but we're also looking at the very early stage companies, post product market fit, but still early stage companies. And there we're backing the best founders in thematic areas that we really like.
What's the benefit of going with Sapphire and not with another firm? What is your unique selling point?
Oh, that's a great question, Ed. First of all, we are very focused on enterprise AI. That's all we do. Everything we do is B2B. And so that specialization and focus really comes across in different ways. We have a massive support team to support our portfolio companies, from BD to talent, and everything, again, is geared to these companies where we've seen across the last 15 years that we've been in business. And the second thing I'll say is we strive every day to make our founders happy. I think we're one of the few venture firms that track founder NPS. We solidly believe that the only way to build a lasting franchise is that our customers, which are our founders, really love us and promote us.
Cathy Gao, partner at Sapphire Ventures, back on Bloomberg Tech. It's been too long. Thank you very much for coming into the studio. Now, coming up, the next time you say, speak to an agent when calling a customer service line, you may not be put through to a human. We'll have the latest on AI's replacement of call center workers next. This is Bloomberg Tech. We've all heard it, that robotic voice asking how it can direct your call. Automation has loomed over call centers for years, but the sector has been very reliant on humans until now. Bloomberg's Brody Ford joins us with the story. Brody, every time I call a customer service line of some kind, I get a robotic voice that says,
yep.
How may I direct your call?
Well,
what's changed? What's new here?
You might notice that the voice is a lot less robotic these days, right? That when you contact chatbots or voice systems, you tend to get an AI system for much longer that in many cases can actually help you.
Right.
And
it's more akin to an AI voice assistant's level of speech capability.
Absolutely. And that might be a good thing for customers, but what we found is that it can be a pretty bad thing if you're working in these call centers, which millions of Americans do. And when you hear executives talk about the labor impact of AI, it's often very lofty, a bit squishy. What we found is that in a lot of big companies, it really is about cutting costs, and thousands of people are being impacted here.
What are the companies behind this? Like, is there some startup somewhere that's really nailed this on behalf of these call centers?
Oh, there are so many vendors here. More than any other software category I've seen, there are 1 million vendors trying to identify the contact center. Brett Taylor's Sierra is a name you hear a lot. Decagon is one you hear a lot, but it's a very unsettled market as of now.
We're showing the performance of call center-based company shares, but also like the companies that rely on call centers, Commonwealth Bank of Australia, Microsoft, Hyatt Hotels. Hotels, oh my gosh. That's the main one for me. Just very quick. This is happening at all levels.
Right. Think about any company that has a lot of consumer inbound, airlines, banks, telecommunications. They rely on thousands of people. And they are really wanting to reduce their labor expenses in most cases.
Bloomberg Tech audience, if you're looking at the screen yelling, operator, representative, we get it. Bloomberg's Brody Ford. Thank you very much. That does it for this edition of Bloomberg Tech. This is what markets look like. Again, the Nasdaq 100 is flirting with correction territory. We're off session lows, but the Philadelphia Semiconductor Index, or SOX, it is chip stocks, down for a fourth day. Apple, briefly a $5 trillion company. SpaceX rebounding. Check out the pod. This is Bloomberg Tech.